Gold and silver have apparently broken out of the spot price slump that we've been experiencing, especially silver. They're both moving much higher. And inflation may finally be the cause. Hey everyone, thanks for watching Yankee Stacking. I bought some gold and silver a few days before the recent rise, and I'm loving my purchase. A little constitutional silver over there to put in my guardhouse box, another tube of silver maples for my monster box, and 3 pre-33 gold Liberty coins, 2 $10 pieces and a $20 piece. Loving this stuff. We're now solidly above $1,800 an ounce in gold and over $24 an ounce with silver as of this video. Now, a slight pullback is possible. Maybe it's even likely as it, consolidates. I think that's natural. But I think that we'll be seeing higher lows on our way to $25 an ounce in silver and maybe even $30 an ounce by the end of this year. I don't know. I think it's likely. I think gold has a good chance of blowing past that elusive $2,000 an ounce in 2022. I'm still buying physical precious metals because I still think they're a steal at these prices. No, the face value of junk or constitutional silver isn't, in the mid-teens anymore. Bullion, silver, and gold still demand a significant premium, but I don't think that premium's ever going to go away. That is the market demand for physical silver and gold, and I only see it going up. Besides stacking this physical stuff, I'm also leveraging my expectations with gold and silver in my IRA. All right, I've invested in several gold and silver mining companies that I believe have massive upside potential. These are speculative plays that I only make with a really small portion of my investment portfolio. And I have at least a 5-year time horizon with them. I don't sweat it when they temporarily go down in price. I'm playing the long game. And in my opinion, this decade looks super bright for precious metals and other commodities. I'm going to explore that opinion on gold and silver specifically with a very knowledgeable CEO and precious metals expert, David Garofalo from Gold Royalty Corp. Full disclosure, I'm a shareholder of Gold Royalty. I got in on that company last September after my first interview with David. I'm also being compensated for the many hours of work on this video. I'm not a professional financial advisor, but this is my way of helping some in our YouTube community be aware of investment opportunities that might fit your needs. Do your own research. Invest wisely. I do, and I chose to invest in Gold Royalty. So let's listen to David, find out if this recent breakout in gold and silver is just the beginning of a massive bull run. Hi, David. Good to see you again on Yankee Stacking.
It's great to be here. Thank you for having me on.
I think this is like our third time speaking.
Yes, indeed. I'm excited to be back.
So let's start with the U.S. stock market, David.
Mm-hmm.
Stocks have been hit pretty hard so far this year. The NASDAQ is headed for, I think, the worst week since 2020. I think the S&P 500 is near correction territory. And all that is without Google and other massive market cap companies even reporting earnings yet. Is all the taper talk and the promise rate increases by the Fed having a negative effect on equities, or is it something else?
Well, look, I think the answer is yes, the short answer. The long answer is that kind of correction was inevitable given the valuations, multiples have been distorted beyond recognition. And that goes back to the credit crisis 12 years ago when there was an introduction of massive stimulus, which has continued unabated for this entire decade plus. And that's resulted in an infinite amount of paper going into a finite amount of hard assets. So we've seen asset price inflation, equity price inflation. A correction was inevitable because of the valuations being at unprecedented levels in the general equity markets.
Several prominent investment banks and some financial analysts are calling for an even larger market correction, maybe even a crash. Do you think that likely?
Well, we've been through crashes at multiple points in the cycle. It's not unusual to get a kind of this kind of valuation reckoning in the marketplace. And the question you have to ask yourself is, how do you safeguard your assets? How do you safeguard the capital that you've spent so many years, working hard to earn? And we've argued, consistently that the place to go is in finite class assets. Think about gold, in particular silver. There's a very, very finite quantity of it. It has physical properties, been recognized as a currency for millennia. And clearly, with interest rates in negative territory, decidedly in negative territory, given where inflation rates are and nominal rates being effectively zero, if you leave your cash sitting in the bank account, it's being eaten away every day by inflation. And your capital is being eroded. Gold provides that kind of protection in that type of environment, inflationary environment like we're experiencing right now.
Wait, hard assets? You mean gold and silver? What about Bitcoin?
It,
It's gotten clobbered recently, right?
it has, and look, I've said time and again that cryptocurrencies are here to stay. Blockchain is here to stay, but there's no physical properties to digital currencies. They're just another fiat currency. And there's no way that the central banks in the world will allow or abdicate responsibility for fiat currency. Inevitably, they'll digitize their own currencies. They will domesticate digital currencies. And then it's not a question of them disappearing, it's a question of them actually getting to a more rational valuation. You can't look at it as a safeguard of your capital with that kind of volatility. If you see 40 to 50% swings in a day, that's not protecting your capital. That's exposing your capital to incredible volatility and risk. And so gold is, again, a very finite class of asset, finite commodity. We're only producing about 5% new supply per annum as a mining industry, and there's a remarkable inelasticity of supply to price. Gold, I think, is going to $3,000 an ounce, but I think that supply, ironically, is going the other way because we haven't been investing as an industry into new exploration, new mine capacity to replace depleting reserves and production.
Wow, $3,000 an ounce. It has been doing well recently, especially silver. Okay. Are we finally starting to see precious metals react strongly to the crazy high CPI numbers?
Yeah, absolutely. And I would say that, history may not repeat itself, but it certainly rhymes. And, I was relatively young in the 70s, but I certainly remember the lineups at the gas station, the empty shelves, a lot of the things that we're experiencing today, it's repeating itself. And, back in the late 70s, inflation was definitely quite ugly. And I think it's comparable to what we really have today. Headline CPI numbers are so manipulated, they're meaningless. And even with that manipulation, we're at 40-year highs of 7%. The reality is, if you're putting food in your stomach, gas in your tank, and a roof over your head, it's not 7%.
No
It's
way.
sidling to double-digit territory. So we're back into that. And in the late 70s, what happened is Paul Volcker came in at the Federal Reserve and said, I'm going to tame inflation. He started tightening interest rates, nominal rates. Inflation went on for years after that. It took him years to tame that beast. And gold rode hard, even as nominal rates were going up.
Yep.
My first mortgage, I remember, was 12, 13% or something like that. And that was into the late 80s. And so we had a prolonged period of super high interest rates. And I remember those quite painfully. They're seared into my memory. We're heading into that type of cycle. But I would say a quarter point here, a quarter point there, that ain't going to, that's not going to affect gold in a negative way because inflation's still going to be going up. And so real rates will continue to go decidedly deeper into negative territory. And that means inflation is extremely insidious. Your capital is being eaten every day.
I totally agree. The price of gold and silver track to real interest rates for the last 20, 30 years in a remarkable correlated way. It's not just inflation, it's the real interest rates, which inflation is a key factor of. Thank you for bringing that up. I think gold and silver are going to join in on the rise that other commodities like copper have had, or uranium. I mean, uranium's doing phenomenally well. What about oil? It's rising fast. I think we're going to see it reflected in the pump soon. Many analysts are predicting over $100 a barrel this year. Do you see that as a plus or as a headwind for gold and silver?
Well, I think it's a plus. Gold is an accurate barometer of inflation throughout the supply chain in the general economy. And again, it protects you against rising prices generally, consumer goods, services, and whatnot. And so oil is just part of that dynamic. But what that means when you're investing in gold as an asset class is, I think, producers are going to have a difficult time, gold producers. I think the best place for you to participate in a rising gold price environment is in the royalty and streaming companies that provide that top line exposure, but completely insulate you from costs.
Yeah, last time we spoke in September, you laid out a great case for both royalty companies in general and gold royalty specifically. Would you refresh my viewers a bit? How does that royalty model help mitigate risk when it comes to investing in mining companies?
Yeah, so we effectively act as a financier, a bank that's specifically focused on the mining industry, and we provide capital to developers and operators to help them build and expand their mines. What we take back in return for the capital we put into their mines is a royalty. In other words, a fixed percentage of their revenue, their top line, not their margins. It's not a net profits interest. It's a top line revenue participation model, which means that as the gold price goes up, we get the benefit of that. As their production goes up, we get the benefit of that. If they're successful in exploring and growing their deposits geologically, our royalty extends to that. So we get leverage of the gold price, leverage of their exploration success. But because we're top line exposure, we have no exposure to their input costs going up or capital costs going up. We have 191 royalties in the portfolio. 6 are producing cash flow currently. 7 are in construction. So we have a nice upward trajectory in our cash flows over the next 5 years. In fact, such a pronounced growth profile, we introduced a dividend this week. 9 months after we IPO, we were already producing enough cash flow to pay a dividend to our shareholders, just under a 1% yield. And we think that we can grow that dividend over time as that cash flow picks up.
I saw that. I was rather excited when I read it on your website. So Gold Royalty is a company founded by Amir Adnati. I mean, this is incredible man. He's behind Uranium Energy Corp, which I also own, by the way. Uranium Royalty Corp.
Well, we were spun out of Gold Mining Inc., which was one of Amir's companies he found. He's a serial entrepreneur in the mining space and very, very successful one. And he founded Gold Mining over a decade ago and accumulated 12 development stage gold assets in the Americas that collectively had 32 million ounces of gold resource. Mm-hmm. And we wrote royalties on all 12 of those. And that was the foundational asset portfolio that we used to spin out and IPO Gold Royalty back in March of last year. We raised $90 million US on the New York Stock Exchange, achieved a $200 million post-money valuation. And then we went about consolidating the space because it's highly fragmented. There are a lot of gold royalty companies out there. And we bought Ely Gold, Golden Valley, and Abitibi. And we expanded that royalty portfolio from 17 to 191 as a result of that consolidation. And we're continuing that theme. We think there's still lots of scope for consolidation. We've launched a bid for Elemental Royalties, which has some royalties in Australia, which complements another tier one jurisdiction that complements our tier one jurisdictions in the Americas. I'd urge anybody that's interested in that bid and whether you're an Elemental shareholder or gold royalty shareholder, please look at the SEC filings on EDGAR, go through our website and avail yourselves of that information. But it's a very compelling proposition in my view.
Great update there. And I plan on riding Gold Royalty like a surfboard during this next bull market in precious metals. I hope it does really well. You said $3,000 an ounce gold. I think if the bull market rally gets going and we top that elusive $2,000, we could see some amazing action in Gold Royalty, similar to what I've been seeing in Amir's uranium companies.
Yeah, absolutely. We provide optimum leverage to the gold price. That's the name of the game. And that includes royalties on Canada's biggest gold mine, Canadian Malartic. We have royalty on the United States' biggest gold mine, Goldstrike, on the underground extension called Ren, and they'll be publishing a resource on that shortly, Barrick and Newmont, and then incorporating that into their mine plan. And 75% of our portfolio currently is in the two best global jurisdictions for mining, Quebec and Nevada. Geologically prolific, have low political risk and low regulatory risk. And we have the vast majority of our portfolio in those two jurisdictions.
That's huge. I love great jurisdictions like what you hold. Well, David, this has been great news, especially as a shareholder. I mean, there's no guarantees, of course. This is a speculative investment. Remember that. But Gold Royalties, immense diversification is a big plus with them. How can potential investors get more info on Gold Royalty, David?
Certainly, very easy to remember. Our website is our name, goldroyalty.com. And we're GROY, GROY on the New York Stock Exchange American.
Great. I'll include all that info in the description of this video below. Make sure you check it out. Thanks again, David. Appreciate it.
Thank you for having me on.
Well, I hope you got something out of that. I sure did. Continue to stack your physical gold and silver, but consider the incredible upside potential with a leveraged investment in royalties, especially royalties like Gold Royalty Corp. Well, thanks for watching, and I hope your day is A-OK.